welcome to my portfolio. I hope you have had a great week. Um, this portfolio has had a lot of volatility this week just because of all the news that's been going on in the market. So I will be going over the portfolio portfolio as usual. As you can see on from last week, the portfolio has really gone down a lot. I'm going to talk about what I'm doing with what strategy I'm gonna be following. We're also gonna go on Seeking Alpha and just touch on what is it that I'm doing, what is dividend, how does it work. We're gonna break that down today. We're also gonna touch on the S&P 500 like we do every week. For the past 5 days, as you can see, the market has gone down pretty significantly. We're gonna touch on that. We're also gonna touch on the Federal Reserve. Their balance sheet is kind of like been plateauing so far, so it hasn't been going up like it was, so we're going to touch on that as well. So getting into the portfolio, like I always like to point out every single week, for me personally, okay, this is Friday numbers, this is great. So me personally, I really just care about what I'm making from the portfolio. The two things I can control whenever you invest into a stock or like this kind of a portfolio, which is dividend investing, I'm solely focusing on increasing the amount of money that I have in all these companies and increasing the amount of money that I'm generating as passive income from this portfolio. So on a personal note, like I've never really created a situation whereby I'm earning money from all these companies from all over the world and all over the US doing their business, doing their thing, and I'm earning money from them. So I can't wait to the point where I get this up to like $100 a month. You know, it will be really, really great. But so far this week, $2.72 went in. I don't know why it's just $2.70, because I have a balance of over 25. So what's supposed to happen is once you have a balance of 25,000 in your M1, it should automatically just get reinvested back into the portfolio. So I don't know why it was just only $2.70 on Friday, but those are the numbers. For this week, the portfolio has gone down quite a lot. But for me personally, like I will always say in this channel, I really don't really care about the market gains that much. It's nice when it goes up, you know, it shows that your net worth is going down. But when it shows that your net worth is going up. But when you get a situation whereby it goes down significantly, it presents you with an opportunity to be able to buy more of what you already own, which it has a set goal. The goal of this portfolio, the number one goal, is to be able to generate me income. And for the past 7 days, the portfolio has been able to generate $4. And for the past month, it has been able to generate $11. This is like great. This is amazing for me, because if I can get this to grow up to $100,000, if I can get this to grow up to $100,000, well, not $100,000, right here, if I can get this to grow to $100,000, that means I should be making close to, you know, 200 to 300 a month, which would be crazy. Getting paid that much from just companies, passive income, and you don't have to do anything. I love it. So far this week, so far this month, for the past 30 days, I've been able to put in $700, which is good. I work hard for this money and I just put it in. I buy more. So for the next 3 months, my income is obviously gonna grow, because obviously I'm buying more. And whenever you buy a stock, it takes 3 months for you to get the money into your portfolio. I'll show you that in a second. If you pop right here to Seeking Alpha, this is Seeking Alpha. You can put it on Google and it will come up. This is the chart, the 10 years chart for Apple, right? And as you can see, Apple has done pretty well over the years. And if you go to Max, you can see Back in the days, it used to be $1.40, and it has grown. Every single share has grown over time, right? But for me, what I'm trying to focus on is I'm trying to focus on this, and I'm also trying to focus on the dividend. How do you figure out how much money you're getting paid on a yearly basis from each company? Well, you pop over here to dividend, and as you can see, for the past 7 years, Apple has pretty much raised their dividend, and for the past 5 years, it has grown by 10% every year. So basically, it's like you getting a raise by investing in Apple. Every single share that you own is like it gets a raise of 10% every year, and at most jobs, people don't really get this kind of a raise. So it's a great thing to invest. So it's a great thing to invest, and you'll be able to get this kind of a raise every single year from companies like Apple, right? And payout ratio simply means what is the percentage of their income, the money that comes into Apple, what is the percentage of it that they pay out, and is 26% of the money that comes into that for them, 26%. And this one simply means every single share that you own, for every single share that you own, you're gonna get paid $3 a year, $3.28 a year, and that simply means you're gonna get a total of $6.28. $3. I'm sorry. You're gonna get a total of $3.28 over the year. So that means you're gonna get paid. This is the percentage of the yield. That's like the percentage of the amount of money that you're getting paid from each stock, right? So, and then you can look here, you see it pays quarterly, and these are the dates that they're basically gonna pay out. This is when they tell you how much they're paying, and this is how much they're paying. This is the X dividend date. I think this is when they're gonna pay it by. Recorded date, this is when you have to have this is the payout date. This is where you have to have the stock in your portfolio, right? I hope that's clear. If you don't understand it, just trying to look into it more. The part that matters to me the most is like this dividend growth section. Well, right here you can see a nice chart of their growth. They just started paying dividend in 2012, and as you can see, it has grown over time, and it's growing every single time. So for this quarter, they're gonna pay out 82 cents, right? And yeah, that's how I basically just look at the dividend. And if you want to look at the numbers really quickly, if you're interested, what I usually look at is I'm trying to think of these companies as the way that I handle my finances. If I go to work and I make some money, well, after I pay all my basic bills, what else do I pay? Do you pay your credit card? Do you pay your car payment? Or can you get rid of those as quickly as possible so you don't pay those and you can just take that money and invest it, which is what I'm doing here. So that's basically what I'm trying to look at when it comes to companies as well. Obviously I haven't really paid for this, so I can't get the full service. But total revenue, all you want to try to see is you want to make sure the total amount of money that the company is bringing in is going up on a regular basis compared to last year, right? So as you can, and these are all in billions, so you can see Apple makes a lot of money, and over time it has grown a lot. So gross profit is total amount of money they're making in profit. As you can see, they make roughly, if you average it out, maybe like 95 billion in profit, and this is their operating expenses. So this side just simply means how much money like it costs them, right? So up into dividend growth here, as you can see, for 1 year it has grown. The dividend has grown by 7.8%. In the past 3 years is the numbers, and the past 5 years is the numbers. They haven't been paying for more than 10 years, so we don't really know. But so far for the past 5 years, if you own Apple, it would have grown by this much. And then if we pop back into yields, let me see yields here. So this is the yield for, I think, currently, yeah, that's the current yield. That's what we saw. So as a price, well, this is the current yield. So what all this information means is, it just means how much you're getting paid from each company. That's what that means. And for me, I try to focus more on increasing my holdings on companies like this all throughout America. Either, you know, McDonald's, Walmart, all these companies, Costco, all these companies that people go out and buy their stuff and use their stuff, and they make a lot of money. So they have a lot of money to give to people like me, which is the investors, right? So this is what I'm trying to create here. Stream of getting a piece of America, getting a piece of American companies, stream of income. That's what I'm trying to do. The company that I have a pretty big holding in is SPHD, and SPHD has pretty much hasn't really grown its dividend that much, as you can see, but it pays out on a monthly basis and it's pretty regular. You know, it's pretty regular. They just didn't pay that much in 2004, and for the most part they've paid out the dividend on a regular basis. We'll see how they perform during this downturn, but they've paid their dividend on a regular basis, and the dividend growth over a 5-year period is also 10%. And as you can see, this is what I like to see. I like to invest in companies that are gonna pay me out of their check, out of the money that they make. They give me a percentage of it, and this is what I like to do, and that's how I primarily earn money from the portfolio. So for those that don't know, if you see a mark like this, that means like I paid for the membership, and it means that over time I'll be able to have 2 different trading windows, so it will also help the compounding over time. So on Friday, this is supposed to be invested. I don't know why it didn't get invested, so it's baffling to me. But if we pop over to the activity tab here and we go to earn dividend, as you can see, this is why I invest. I do what I do. This is how I make money from the portfolio. This is basically from the start of this week. You know, Pfizer, Amgen, all this ETF, Johnson & Johnson, all the basically petroleum company paid, gas companies, Target, Moody's, 3M, Microsoft, Yum Brands. And you see, it all varies, the amount of money they all pay, but it all add up. Look at Johnson & Johnson is 46 cents. That's I think that's the biggest that I earned this week. But over time, this is going to go up, and this is what I see every single day. Every single day I wake up, I get a text: this company has paid you, this company has paid you, this company has paid you. This is what I'm trying to see, and this is what I'm trying to show you guys in this, and with my channel, that this is the kind of thing that is possible. And as long as you can grow, when you have a portfolio like this, the 2 things that you can control is the amount of money that you put in and the amount of money that you earn. You cannot control how the market do, if it goes up or goes down. You have no control over it, and you have to accept it, that this is the reality of investing. Like, sometimes the market will go up or the market will go down. Like right here, the portfolio has really gone down has gone down a lot, but that's probably just from SPHD, which is okay. This is a monthly paying dividend. I think it pays like 16 cents per month. So this one alone probably will be paying me roughly 15 $13 to $15 a month. So which is good for me. That's part of the journey of getting to like $100 a month. So yeah, I'm gonna be buying more into the portfolio in general, so I can increase my holding in every single one of this ETFs, and that's exactly what I'm gonna be doing. And if SPHD goes down by $500, I'll be able to jump in and buy some more. I'm gonna put another $500 or $600 in at that point. So I'm really enjoying what I'm building here. This is great, and I'm happy that you're watching this, and hopefully you can share it with your friends and family as well, so they can know about the channel. Please support my channel by sharing the videos, liking the videos. That's the only way that you can support my channel, because my channel is still really small right now. So thanks for doing that. The other feature that I also wanted to point out is the M1 borrow section. If you go back to a previous video, I've explained that once you have over $10,000 in value in your account, you can go to M1 borrow and you'll be able to see how much money you can borrow at such a low rate. So M1 allow you to borrow 35% of your portfolio at any time. And because my account now is over 12,000, now I'm able to borrow at any time. So far I'm able to borrow $4,300 at 2%. No application, no credit check, no nothing. The money is just available to you to borrow at any time. Now, if at any given time you can get this up to 100,000, which I'm like just over 10%, 12%. I just accomplished that 12% goal. If I get this up to 100,000, there's a likelihood that you can borrow like 35,000 at 2%, and then you can take that 2% and go invest in other things. You can have 35,000 and put it down on a down payment, get a duplex. You live in one place, one side of the house, and you rent the other side out. You know, these are things that you can use the money for. So this is a great feature. M1 is a great software, is a great broker. Like I absolutely love it. I think everybody in the US, if you have access to this, you should be using this. This is great, especially it having a feature like this. And the other thing that I'm going to point out is M1 spend, but this is extremely personal. I'm not going to show that. But once you pay for the service, you get to earn 1% APR. So you get to earn 1% of your money that is in the checking account, and you also earn 1% in cashback in all the transactions that you do. And with someone like me that don't like credit cards and all these things, the M1 spend is really good for me. So yeah, I think that's pretty much it for that section. The S&P 500 has basically lost all the gains from last week, pretty much, because last week it was up like 5% or 6%. It's pretty much lost all the gains. The Federal Reserve came out and just they talked about the unemployment rate, that they are a little bit fearful about the unemployment rate, that it can be higher than the 13% that they reported. So that's why the market tanked. I am going to keep a very strong eye on the market. I think it's going to go down some more. I shorted the market around this point, but I shorted the market around this point because it looks like we're on a downward trend, and I will show you that in a second. But if you look at 1 month, we're still pretty much up for the month, but as you can see, this week alone we went down a lot. I'll leave a link to this video. I'll leave a link in the description of this video. I highly recommend you go out and you watch this video. This is Jerome Powell. This is a guy that is in charge of the central bank of the US, and he basically touched on the unemployment rates and all these things. So watch this video. So leaving that aside, if we pop over here and we look at the we look at the Federal Reserve's balance sheet right here, the trend, as it looks like they're plateauing, so it's not going any higher. So this is their balance sheet. This is like the total amount that they've lent out to America, to the world. So this is the balance sheet. So it's balancing off, it's kind of plateauing, so that's a good sign. Like I show this every week. That's a good sign. So what other stuff means for a portfolio like this is, to be honest, I keep an eye on what the Federal Reserve is saying, and I keep an eye on what the economic numbers are. I really don't really watch the news that much because it usually don't really help. It just confuses people. So keep an eye on what's going on in the economy, what's going on with the numbers, so that way I can make decisions with my portfolio. And as of right now, the decision is to just buy a little bit more, right? And just keep on doing the same thing. Put money in on a weekly basis, right? This is the two things I can control. I can control how much I put in, and I can control how much I earn, right? So I put money in on a weekly basis, and within the next 3 months, that money start making more money for me over time, and all that money gets invested into all this portfolio. Now there's different section of this portfolio. This is particularly geared towards income. This is geared towards income. This is to follow Warren Buffett. This is geared towards income, and this is just to like get exposure to different sectors of the world, really. So I like all the holdings that I have in here. I completely like them. If you look at Berkshire Hathaway here, you see all the holdings. If I can increase the amount of money that I have invested in them, that means there's a big likelihood that my income is gonna grow from that, right? If you look at passive income section here, this side alone for the week has generated $2.30, 33 cents, and these are all the different sectors. So a portfolio like this is great for what I'm trying to do, which is to increase my income on a monthly basis. So most likely next week this will definitely go up, So thank you for watching. I will have a link to this video, this particular link right here. I will have it in the description so you can check out all the holdings that I have. This is the expense ratio, which is really low. This is the dividend yield. So this is the total amount of money that I could potentially earn. So I'm looking at this and thinking to myself, if I can get my total account up to 100,000, I could be earning roughly this percentage on a monthly basis, which will be close to $300 a month. I have a lot of companies because I do not want to stress over one particular company or over a few companies. I just want to be able to put my money in and be able to earn dividend. This portfolio is primarily focused on earning income, earning dividend. I cannot say this enough. That's exactly what this portfolio is focusing on. Earning money, earning money, earning money. Okay, so that will be it for this week. Please like and subscribe. Share my videos with other people that might be interested in learning and starting their own investment journey. So share with other people. Thank you very much, and have a good week.